ready. So Nikki, if you want to get recording, this would be awesome. Thank you. Okay, thanks Team B. I am so excited. Welcome to our Wednesday night call, 30 minutes. We've got a special guest speaker and it's all about tax strategy, tax savings. So I'm going to introduce our guest speaker. I'm just going to go to his bio right now. This is Dwayne Richards, and he has started the DR Richards and Associates in 2013. He has a financial wellness practice that focuses on health, wellness, and happiness. He's a registered CPA in Canada, licensed financial advisor in the province of Ontario. He's got his background in 18 years of corporate accounting experience, working in healthcare, construction, consumer goods, and now working with small business owners and entrepreneurs. And as I go through, oh my gosh, you got so much going on here. But I just want to say he offers a lot in his services, like life insurance, critical illness, disability, health insurance, income tax return, QuickBooks, bookkeeping, and color mirrors reading, including your money story, which, wow, that's, I'm sure, is a whole other presentation that we can get you going into. So welcome, Dwayne. I so appreciate you being on here tonight. I know this is such an important topic with small business owners, and you're definitely been in the world of network marketing, so you understand the things that we can write off and can't write off. And I know for me, I've been in the industry for 14 years, and my learning curve, it's been like this. And I wish I met someone like you 14 years ago to do a little bit more of hand holding and probably be smarter with my books. So for those of you that are like maybe new to network marketing or maybe new to your like first business, if I could give you any advice and maybe some regrets that I probably, you know, made a lot of mistakes, i.e. doing my own accounting and my own bookkeeping in the beginning, which was a crapshoot. And I had no idea what I was doing. And I know I was trying to save money, but I probably wasn't really saving money when you look back. So I just want to welcome Dwayne. We have a pretty big team. I know there's only about 22 on us, but there's going to be probably hundreds watching it once the kids go down and watching it on their own time. So what I'm going to do is I'm going to share the screen, and I'm going to put us on speaker view so that you've got full show, Dwayne. And
okay.
I'm going to just grab your PowerPoint presentation, put it in full screen, and you are fully on. So welcome again, and we're so grateful that you're sharing your time with us tonight.
Okay, well, first off, I want to thank you for the opportunity. And I guess one missing, I missed it because it's my bio that I included, but also where there also is a connection is I also was one of the first bank code trainers in Canada 6 years ago. I had the opportunity to meet Sherry Tree at a Peak Potentials event in Palm Springs. So I've been using the bank code methodology in my practice now for the last 5 years. So, and then with that, we got connected with Courtney Epps. So that's, you know, so some people maybe have seen Courtney's presentation or maybe have seen Courtney at an event. And that's kind of where that's how we kind of got connected, was sort of a connection through you having seen Courtney. Courtney's presentation's all US based, and what I've had the opportunity is to put together a Canadian version of the presentation. So don't feel bad, no regrets. I also, as a professionally trained accountant, went to school for accounting. I didn't learn this stuff until about 5 years ago, spending 18 years in the corporate world. My car was not a tax deduction. My phone was not a tax deduction. I spent 18 years, just like everybody else, doing the corporate grind without any extra benefits of knowing the benefits of having a home-based business. So when and now that's one of the presentations we do for organizations is this one is why everyone should have a home-based business. And we're going to talk a little bit for the people watching, first for you, but also how you can use the same information from a recruitment point of view, is that just have people start a business, and even when they're in their corporate jobs, there's the tax advantages of being a business owner. All right, if there's any questions, see, maybe we can try and keep the questions to the end. That way, keeps it smooth, but I'm not trying to figure out who's waving their hands at me. All right. Okay, like I said, it's the best recruiting advice. Let CRA, which is the Canada Revenue Agency, fund your startup. When I say a startup, it's launching your business. That if you're doing shifting from being just a customer, you can be a customer in any of the network marketing companies. I used to be a customer with Juice Plus. We had the chewable gummy thing for picky eater kids. They still didn't eat them, so I ended up eating them. They're pretty tasty. But so how you can let CRA fund your startup. Okay, so I guess the first slide really, now that it's an example that I used. I know some people on the call, you're not here, like you're not in a corporate job anymore, but just as a quick example to showing you if this can either be an individual's income or a family income. The reason I picked 75,000, that is the average household income in Canada is roughly around $75,000. So this should show you how and why everyone should have a business on the side. So if we're looking at this, salaries of 75,000 on the first line, you're paying just over $10,000 a year in income tax, and that tax is taken off at source from your employer. Combine that with the provincial tax, CPP, the Canada Pension Plan, as well as EI, you're paying out a total of almost $19,000 of tax. That means you're taking home $56,000. When I do a similar presentation for grade 10 students, we ask them, you're making 75,000. How much do you think you actually take home? And it's shocking because lots of them think 60, 65, 50. Some had 56,000, but there's still a big gap where a lot of people think that on 75,000 you're bringing home 60,000, and that's not the case. You're bringing 56. Having a math degree, sometimes we need a math degree to calculate tax rates, but that means you're paying actually 25% in tax. One quarter of your paycheck is going to taxes. Now, I'm sure this is not news for anyone because most people on the call have at least had some sort of employment along the way. And you can look at the marginal tax rate versus the average tax rate. And like I said, we're paying 1/4 in tax. Now with the next slide, I'm not sure if that's me or you. What we're looking at is the advantage is why we want about the whole home business is there's that federal tax amount of $10,000. And what that means is that's a potential refund. What this means is, as an example, I'll use a brand new client that I have right now. Actually, she's based in Vancouver. And she, in 2018, filed her income taxes by herself, not claiming her business startup. What we're doing is actually we're going back and actually refiling her 2018 tax return because in 2018 she spent just over $30,000 in personal development, Tony Robbins events, getting personal development, mindset training to start her coaching practice in the wellness space. She is in actually another network marketing company, a skincare product company. So what we've done is we've actually gone back and refiled her 2018 taxes, and her tax refund is going to be $12,000 over and above the $17,000 the $1,700 that she did herself. So she did it herself. She got $1,700. With my assistance, we're getting her a refund of $12,000 because the reason she's eligible for that is because she's actually paid income tax at source in her job. Now, what we use in this, maybe we can jump forward to the next one and then we can always jump back. So when we look at this type of thing, and this is the advantage of going from, if I'm using Juice Plus as an example. When I'm shifting from being a customer, it's nice. I get a customer. I can be on my auto ship every month. I can get my consumables shipped to me, and I'm just a customer. Now, when I do that, and I don't get any of the advantages of being in business. If I just simply do the simple shift from saying I'm a customer to say now I'm going to do it as a business, this is where the tax deductions become, because now, and it's not even about actually being, it's not that you have to earn $10,000. We're not worrying about being a 6-figure earner or a 7-figure earner in network marketing. We're simply saying that I have the intent. My intention is to make sales. My intention is to earn a commission. And once I set up that intention or state that intention that say, I am now, put my shingle up, I'm now a business, I'm now I have my home-based business, any expenses incurred for the purpose of gaining or producing income are now tax deductible. Incurred with the reasonable expectation of resulting in future business. So early on, we all know that I put my toe in about 12 different network marketing companies, to be honest. We tried with, I am still a member with Legal Shield and a number of different ones. And my net earnings are rather really small. Even Sherry Tree has her story where in first year of network marketing, she made just over $700. But like everything, any business, we incur a lot of additional costs in starting up. And those costs incurred in starting up, including getting business cards printed, and if your business cards aren't included, if you create a website, if you're going for training, coaching, to hire a coach, all of those types of expenses incurred early on with the future of building a business, all those expenses can be tax deductible. And it has to, but there still has to be sort of a reasonableness to them. So if you're trying to tell me that you need I don't know, a Lamborghini or Ferrari as your corporate car, chances are actually you're limited to about an $800 a month car lease amount anyway. So you cannot go and take a large fancy car because it's not reasonable. But any of the other expenses. So again, when we're talking about early on in your startup, the whole thing is not actually incurring any extra costs. Our goal, and we'll do it in the next, I think it's in the next slide, is what we're looking at is saying examples of tax deductible expenses. So what we're trying to do is just say everyday expenses that you're incurring any day, anyway, already. For example, everyone's cell phone. So I have my cell phone here. For 18 years, I had a cell phone that was a personal phone that was not tax deductible because I wasn't a business owner. On average, if I say that if your average monthly bill is $100 times 12 months, that's $1,200 a year that we're spending on our cell phones. Now, just as a slight, to be slightly conservative as an accountant, what we say is generally 50% of your bill is tax deductible, because we're still saying that unless it's your designated phone for work, then 100%. But if it's kind of a personal plus a business phone, it's reasonable to say that 50% you're still going to get your personal phone calls. So just to keep Revenue Canada happy, I always recommend with my clients that we only take 50% of the cell phone, but that's still $600 for the year. If we look at home internet, you're running an e-commerce business, you need internet. You need to place your orders, you need to run your website, you need to be able to send email, you need internet. In which case, if I don't know what your plan is, Rogers, Bell, pick one. I've conservatively said if it's $80 a month times 12, divide by 2, I'm $480 per year. And now the other piece is your car. So if you don't have a car, then Doesn't mean that you can't be in business, but generally people here in Ontario or in Canada, unless you're like me, you live downtown, you still need a car. It's pretty hard to get around anywhere in Ontario without a car. So what we have to do with this is, and this is where there's a little bit of work to it, and this is to say it's the percentage of the car. So on average, I've calculated it out that it costs anywhere between $8,000 to $12,000 a year just to operate a car, depending on what your car is. I've said $10,000. And then what we're going to do is we're going to track your mileage. So how many kilometers do you drive in the year total? So if I use an example of you put 15,000 kilometers on your car and 3,000, which is very conservative, that's only 20%. But again, if you're starting out as a home-based business and you're you know, a stay-at-home mom, you're not necessarily doing a lot of driving for the business. So we're saying just 3,000 or 20%. 20% of the car use is for business, in which case I take my $10,000 total, multiplied by 20%, and I'm giving myself a $2,000 tax deduction. It's pretty good. And that's where we're getting just conservative. Now what we do is there's always tax strategies about how to make better use of your car. So for example, when I go out to see a client, my kids are a bit older now, so I make them take the bus. I'm a mean parent. I buy them the Presto card, but they have to take the bus. Like honestly, get yourself. You're 15 years old, you can get to school by yourself. But before, when they were younger, I would drive. You know, I drop the kids off at school, and I would continue out to meet a client. Why? Because that whole trip becomes a tax deduction. So if I go and take the kids to school first, come back home, get ready, and then go out to do an appointment, that first leg of the day isn't, it's personal use. But if I'm able to get out the door ready, drop the kids off at school, go to a networking event, go drop off something to a client, meet someone for coffee, hit the grocery store on the way back home, because why wouldn't you? Because it's still the same trip. Now I'm back home and my whole trip is tax deductible. So as an example for me, most recently I did a presentation up at the library up in Shepherd and Steeles. I then drove to Etobicoke to see my kids, and then I drove back downtown. Now that whole, it's a little bit out of the way, but that whole trip is business related because I went out to do the initial presentation. So, and that's where we get into keeping a mileage log. What I recommend, I don't have it here, but what I actually recommend for you is I have a $4 paper planner from Staples, and I just keep it in the car. So every day when I get in the car, I just had a client meeting tonight at 6:30 at Park Lawn in Lakeshore. You're like, really? You're going to keep track of the mileage? For sure. 25 kilometers there and back. When I get back into the parking spot, I get the book out and I write down, because I hit the odometer on my car. Now you can get an app. There's all kinds of apps, but I'm like, why are you spending more money than you need to initially? I'm more about actually getting in the practice and the discipline and the habit of tracking it to understand what you're doing. So then I write down my 25 kilometers. The reason I want to do this is because I want to get my mileage up to 70, 80, even 90% possibly. And if you do that, you need a mileage log. Now, you can say, well, I'm going to use the phone, but when Revenue Canada knocks on your door to audit you, you don't want to be giving them your phone. It's so much easier to say, hey, here's my $5 paper calendar from Staples for 2018, 2019, whatever tax year, go crazy. And all that's in it is just, and every day of the week is just mileage, and I say CPA, or I'll name the client or what networking event I was at. I'll just put a quick note, and that's all. So don't be intimidated by this need for a mileage log. It doesn't have to be that complex. It's just pretty something simple. Later on, when you're making the extra money, yeah, you can get an app on your phone or an app or the equipment in your car that you just hit a button and it automatically starts tracking every time you're in the car. You're paying anywhere from $10 to $50 a month. If you're earning the money, then go crazy. But my goal is not necessarily to just create more business expenses for you. My goal is to show you how to save some taxes, but at the end of the day, we want to increase your income. and increase your bottom line, because that increases your cash flow. The next one up is our home office. We're talking about the home office. Is you say, well, I don't really have a home office. I work out of the, I personally work out of the dining room here. We live in 750 square foot condo downtown. So I generally allocate about 25% to say the dining room, living room, kitchen. So my workspace represents about 25% of our living space. So then I can now use the 25%, so either a percentage of the square footage or a percentage of the rooms. So if you actually have a home office and it's one of 6 rooms, then 1/6, and that's the percentage you'll use for calculating your home office. Home office expenses, it's your heat, your hydro, your utilities, and the big one is your mortgage interest. If you don't have a mortgage, then it's a percentage of your rent. Now, what happens is, it's a little bit more technical, and this is sort of a little seed as to why you want to have an accountant or a bookkeeper help you with this, or have someone actually help you on your taxes. Home office expenses, you can track them, and you can still put them into your tax return, but you cannot use home expenses to generate a bigger loss. So if you're early in your startup and you're operating at a loss, negative, which is okay, 3 to 5 years, you can actually use that loss to trigger a bigger tax refund on your T4 income tax. However, you can use it for a loss carry forward. For example, you can accumulate losses and you can move those to future years. So you still definitely want to keep calculate the home office expenses. You just can't trigger a bigger tax loss with your home office, because they're saying, really, end of the day, you're going to be having that living space anyway. So it has to be a little bit of a reasonableness as to the expenses or the tax deductible of it. The last one is the big one. This is travel expenses. Travel to business events like annual conventions. I'll give you a little tip. I just got back about a week and a half ago. We got back from London, England. We were in England for 10 days. I don't say this to boast. I say that part of it was vacation, but the first 2 days of that trip to England was for a conference. So one of the pieces of the modality we work with is a system called Color Mirrors. It's a psychology and language of color. They did a book launch and a 2-day workshop just outside of London. So we went there first, spent 3 days with that community, and then spent 7 days visiting family and relatives and touring London. Now you're like, well, that's part of a vacation, which is true. My vacation isn't tax deductible. However, my airfare from Toronto to London Heathrow, and the 3 to 4 nights of the hotel, and the meals, and the fees for the conference, and the other things that we've purchased are all business related and therefore tax deductible. So it's a great way to incorporate business travel into vacation and make it tax deductible. So I'm not sure where your most recent event was, but if I think your one event was in Dallas, if you want to go either a little bit early or stay a little bit longer to tack on the vacation, your vacation portion isn't tax deductible, but guess what? Your airfare and the time at the convention is. So that's a huge advantage about having a business, that all of a sudden your travel can be tax deductible. So I know, Nicole, one of the things that you mentioned is possibly with some of the people on the call is that you're stay at home. You're stay at home with the kids, so you're no longer, you don't necessarily have a paycheck right now, and your sole source of income right now is Juice Plus, or your side hustle is your sole source of income. So when I show all those tax breaks, you're like, that's nice, but I didn't actually pay any income tax. That's okay. But what we're going to show here is the other side of it. Is sometimes we get into the concern about, well, how much can I earn before I have to pay tax? Because the big plus, or the big advantage with being a business owner, is that there's no taxes withheld at source. So when you get your commission check every week or a month or However often you get that, that's pure money in your bank account. See, Revenue Canada hasn't withheld any taxes or no CP or EI. So early on, like everyone, including your children, up to the age of 18, your basic exemption is you can earn up to $12,000 tax-free. Now, if I use the slides before that, say my phone, my internet, my car, a little bit of travel, if I have business expenses of another $4,000, that means I can earn up to $16,000, which is a little bit more than $1,000 a month. I can earn that tax-free. Just a second here, the comments, we're good. The reason I want to do that, because again, if we're, one of the things or concerns or issues could come up is that your household. So if the primary earner in the household, and all of a sudden you're earning income that doesn't have any tax withheld, is what we don't like to happen is all of a sudden you're doing well in your company, and now you're come March, you think you're getting a refund, and you actually owe some money. So this is where, if we go back to that previous, if you can jump back to that previous slide, yep, that one. So what we're looking at here, it's about tracking as your business grows. So you kind of have this, like, you're good for that first, $1,000 a month. You can pretty much just put that into cash flow and work away at that. Once you start making more than $1,000 a month, you got to start remembering to put a portion of that into an account, because then you're going to be potentially into having to pay income tax. And I never like it when I have to go to a client and say, hey, guess what? We did the math, and you're going to owe, $2,000, $3,000, $4,000, and you use that money during the year for cash flow, and you didn't necessarily keep the $2,000, $3,000. And it happens. So just as a quick example, I'll share a quick little anecdote with my niece. My niece is in her early 20s, and last tax season, my sister called me. She's like, I'm working on Sarah's tax return, and I'm not sure what I did, but she owes $2,000 in income tax. And what happens is my niece was working as an ECC, like an early childhood education. So she had a day job, mornings and afternoons at a school, and then that job she earned just close to $30,000, and she paid tax on her $30,000. Now she also worked in evenings on the weekends at a gymnastics club, and she was paid $5,000 on payroll, but because she didn't work that many hours, they didn't withhold any taxes on her $5,000. On top of that, she worked for a private family, babysitting or caregiving on the weekends for a little boy that has autism. And on that job, she earned another $4,000. So she earned $9,000 on top of her regular salary, but the $9,000 was no income tax paid. Not so good for someone who's like 23, 24 years old. She doesn't have an extra $2,000 in March to pay the tax bill. So what we end up looking is like, well, that money that you earn from caregiving for the young boy, that's self-employment income. So now I can have her write off a portion of her car, because she drives her car every Saturday from Kingston to Napanee to look after the boy. And then a portion of her cell phone, because she needs her cell phone to be in contact in case something were to happen, as well as a portion of her internet, and a little bit because now she actually has a job, or she has a business. She's self-employment income. So at the end of the story, long story short, we were able to drop her tax bill from $2,000 down to just over about $102 for the year. So I'm expecting a better Christmas present from her this year, because I should be her favorite uncle. But now the interesting thing is she did actually get in, she actually was doing some stuff with a network marketing company in this current year. So now we can also claim a little bit more of that as well. But it's all good, because she's actually engaged and they just set their wedding date. She's getting married next December 28th. So again, if I can help her save a little bit of money on her taxes to help pay for a wedding, and as I say, they have a small wedding and invest in your kid's business and not so much in their wedding. Okay, so just in a quick summary here, I hope we're doing okay for time. So the key here is about timing. So it's a great time. Now, this is the best time. Like yesterday was the best time, but today's the next best time. Get started with your own business. Business owners, deductions, and actually the best time is actually when you still, if you're recruiting, recruit people that have a T4, like a T4 day job. I'm actually putting together stuff for teachers because teachers, they're out going on strike, they're getting ready to go on strike. But teachers have they earn a good annual salary, and they have a chunk of time in the summertime. My father was a teacher, so I no jokes about having the whole summer off. But they have time to actually do a side hustle. And the whole thing is, if I can convert additional tax deductions for teachers, they'll be a little bit happier probably. Entitled to deductions, so taking deductions that you're entitled to. So this is all about, and this is why I was working with Courtney, because Courtney works in the US and she follows the US tax laws with the IRS. But it's important to work with a tax professional in whatever jurisdiction you are. If it's in Canada, it's working with under the guidelines of CRA. The other part we didn't really talk about, but you can actually hire your family. I know, I actually was asking my son. My son's 13 years old, and he knows more about Instagram than I do. I'm starting to work a little bit more with Instagram, but I was actually asking my son about, because he's using Instagram stories, and I was like, how does that work? And so you could actually, again, be reasonable. But if you have, teenage kids, 15, 16, 17, there's no reason why they can't actually help you with your social media marketing for your business. And you can actually pay them. You can pay kids up to $10,000 to $12,000. They can earn it tax free, and that's deductible on your business. You don't have to be incorporated. You can outsource. You can hire contractors in your business. Hiring an accountant. So hiring someone like myself. The great thing is, now that you're a business owner, my cost to prepare your taxes, to do your bookkeeping, my cost is tax deductible. So if you're a business owner, or if you have investment income, paying someone to prepare your tax returns for you is tax deductible. And I can't really, let me just hide.
I think that's the last slide.
Yep. No, I'm blocking my last column, but yeah, okay. But that's okay. I'm pretty sure.
Perfect. So let me just see here. So we got chat. Okay, that was a lot of information.
It was a lot. But
so good. I loved your examples. Guys, if there are any questions, do you guys want to put in the chat section any questions that you might have for Dwayne? And how does somebody get a hold of you, Dwayne, if they want to hire you, or at least have a consult with you? How do they get a hold of you?
Yeah, that's a great question. So maybe I can put it in.
Put it in the
I'm
chat.
on Facebook. I know, these days it's I'm not sure if everyone's on Facebook or not, but I am actually. I build a fair bit of my client base is on Facebook, using we chat with Facebook Messenger.
Yeah.
My photo looks somewhat like myself on and it is Dwayne Richards on Facebook. If you want, I'll put it in the chat here as well.
Okay, that's perfect.
Anybody you can reach out to me. I'll put my phone number and my email address in. So if you want to email, I know, don't assume everyone's on Facebook. You're running this on Zoom, so not everyone lives on Facebook. I will put my phone number in. You can call me, send me a text. We do coffee, phone conversations there's no cost to that until we kind of figure out what your needs are. And
Dwayne, here's a question. Somebody said, if someone went to conference before starting their business, can they still use it as a deduction? So they come to conference, they get excited, and then they sign up after the fact.
Yeah, because we're not, and this is where that whole, when did I start my business question comes up. So if it's in the same year, so if you went to like say you went to conference in March and then you kind of went through the summer and now there's a bonus and you're going to start the business, in December, I don't really care. It's in the same tax year. Generally, some startup costs are deductible. And again, we're talking not to treat it small, but we're talking small dollars. We're not talking like you're expensing, $50,000 of startup costs for launching a full e-commerce website.
Yeah.
You're saying, you went to a conference, it cost you, spent $1,000. And yeah, so if it's in the same tax year, but like I said, even this client, we're going back to say, like, technically she really launched her business in 2019, but she did a lot of the prep work in 2018. So we're actually going back and refiling 2018. We just have to make sure, again, that there's receipts. In her case, I asked her to produce the receipts for the Tony Robbins events because it's big dollars.
Yeah.
It's one thing like your cell phone bill and like your home office expenses. Not that you don't want receipts. It's always best to have all of the receipts. But when you're first starting out, like if someone started their business is like, I don't actually have all my everything in order. It doesn't mean that you can't start it. It's just you make sure that the bulk of it's ready. All right, there's a couple more here.
Is a monthly product we order considered a tax deduction?
So it's a little gray, and it's actually not so gray. It's black and white. So the monthly product, this is where you really have to get better at. Personal consumption is generally not deductible. And you're like, some people will get into saying, well, I am my product, and it's more around, and this is where it's better to actually possibly do a separate order or break out your order if you're doing an order, and then in that order you're going to use part of it for samples.
Yeah.
Other companies where if you're doing an event, they'll do a separate order for the event. So then it's the bookkeeping. It's all about keeping the bookkeeping really neat and tidy. I'll share a quick little bookkeeping trick for you. Right away, as soon as possible, just have a separate bank account. It doesn't have to be a business bank account. It just has to be a separate checking account. Have it at the same bank, but have a separate bank account for your business, separate from your personal. This makes your bookkeeping so much easier. And at the end of the year, you run all the transactions. So I'm not going and all of a sudden seeing transactions from Metro and there's diapers and baby food. I was there. I have 2 kids, 13 and 15. I understand it, but it's so much easier if I have a card, and my RBC card is attached to my Petro points card. So I could put my gas on my credit card to get the points, but I don't bother. I just put it on my RBC debit card because I get my 3 cents off. But then my bookkeeping is so much easier. When I download my statement, there's all my gas.
Yeah.
It's just makes life so much easier. So it's really the product, and that's where someone said, oh, about like hair, I have a client, someone was asking me, clothes, hair, getting my hair, I understand, I have a girlfriend and an ex-wife. I understand about, women and hair and it's not inexpensive to get your hair cut, or but that's personal. Yes, your brand, you are your brand. I get it, but the CRA doesn't really see it that way.
Right. I do know my accountant is approving me to do it if I'm a speaker. Like if I'm in front of the room, if I'm a presenter, she said, absolutely, you can justify, your new outfit, your whatever, if you are an influencer, if that is part of what you do. So that's new for me. That's just new this year. I've never done that before. But she's like, I've looked into it. I feel comfortable doing that. So, that was new information. There's a question here. Mary Lisa said, I was told by my accountant years ago that you can't submit car expenses if you're at a loss. Is this true?
I still submit mine. Again, you may not be able to trigger like a bigger loss, but you can trigger a loss carry forward. Again, you can carry forward losses for 4 to 5 years, because the idea is that you're building I still put in, I have clients that we still put in the car expenses, and some things like again, it's all about having the details. So when you initially do it, you need to know, like, is it a purchase? Is it a lease? The cost, because it calculates out it's a, not to get too technical, but it calculates an annual capital cost allowance.
Yeah.
I also could have put in there computers. So the other thing is, when you start so if say you've launched your business and you already have some of these assets, you can bring those assets into the business. So if you already have your home computer, you don't have to go buy a new home computer to make it a business asset. You can bring over my laptop. I brought my laptop into my business. I had it ahead of time, but I bring it in, I attach a value to it. And then I can start depreciating my computer. So it's all about the things, like same with your phone, like use your phone, like don't go and buy extra, don't go and spend extra money to justify being in business. Being in business isn't justification for retail therapy. Being in business the whole idea is to improve your cash flow by making everyday expenses tax deductible as a business owner.
I think Mary Liz said, did you see that? I meant more like maintenance and gas and mileage.
Yep, same thing. Again, I track it, a portion of it. So that's where that's why you got to keep the business versus personal use percentage.
Okay.
I still put it, whether I have a client in a loss or not, we still put it in. And then I let CRA worry about whether I can get it as a carry forward or I can trigger a bigger loss. Generally, it's right now for some of my clients, it's triggering like a lost carry forward to be used at a future time.
Right. Awesome. Okay, guys, I think we're going to wrap up. We only usually do 30 minutes, but I know we've pushed it to just about an extra 15, but this was very, very valuable information. Dwayne, I want to thank you so much for your time. We so appreciate you.
And can I drop in one more link? Will they see the links here, or like if someone's watching afterwards?
Yeah, they totally can. So they've got your phone number, they've got your website, and is there anything else you want to put in?
Yeah, what I do is I actually have a tax course on Udemy that's a little bit older, but it's still relevant.
Okay.
I'll have a new tax course on Teachable coming out in the new year.
Okay.
But this course has probably over 15,000 students worldwide, and it was just simply let's get in here to get the code, and it really just talks about what we talked today, just a little bit more detail.
Okay.
But I'll put that link in there, and it's on the Udemy platform. Check it out if they want to. And then, like I said, in the new year, when the Teachable course is out, my plan is and just to not take too much more time, but the plan is with the Teachable course is it'll be probably about $100 course. But my plan is to actually have it so that it actually becomes you can actually become an affiliate. So all the content that we just shared today will be in that Teachable course, in which case people as a team building piece, you can actually share that link with new members of your team. They sign up for $100, they take the course, and because you shared the link, I pay you $20, 20%. So it's a nice way to earn a couple more dollars. But it get great resources so that we don't necessarily have to keep doing the same call, that if people are in different time zones or different areas, they can just hop on and go through the Teachable course and go back to it at any time. A great tool as a recruiting tool for people new to network marketing or new to being business owners. So that will be up probably in the not till the new year, but when it is, I can share that with you, Nicole, and then you can send it out to the team if you like.
Okay, thanks a lot, Dwayne.
So much.
Merry Christmas, happy holidays. Thanks, team, for joining us tonight. I hope you found it was valuable. Save you guys some money heading into 2020. Have a good night, everyone.